We have breaking news. Important news. Xavier from Argentina, Argentina's president, just gifted Elon Musk a literal chainsaw. This is great. I mean, how could you not love this? And I mean, this is in reference to like hacksawing government spending, which is something that Xavier here has been doing in Argentina over the last 2 years or so. What's actually interesting about Argentina's stock market went up over 170% last year. By far the best performing stock market. And, you know, I bring that up because what if we could see, obviously not 170%, that would be crazy, but what if we had a really good year this year? Just crazy thought, I know. Because of some of the Washington policies, because of DOGE, because of less inflation, and ultimately bring down treasury yields. I mean, Argentina did it. Could we do the same? Here in this video, I will discuss what you need to know heading into tomorrow. There is some economic data that is going to be very important, that is really going to move our markets. Not all economic data these days is equal, and this data is a little bit more important than some of your other data. Really, two different things, and I'll break that down here in this video. But first, we have big news. Rivian today said that they expect to deliver 46 to 51,000 vehicles in 2025. Total vehicle deliveries in 2023 was 50,122. In 2024, they had 51,579, and now they're projecting on the high side 51,000 vehicles. That would essentially be slight year-over-year negative growth from 2024, but basically flat growth since 2023. And on the low side, the numbers get worse. That would be 5%, give or take, year-over-year declines to growth. That's not great. Not at all. Now, this could be part of the reason why Tesla is falling here in after hours. Now, obviously, Tesla, Rivian, they're two different companies, but it's highlighting maybe an issue of affordability for vehicles. Really, I mean, we've seen this in real estate for a long time. Real estate transaction volumes are at multi-decade lows. But this is not a great sign. Now, Rivian's CEO, RJ Scaringe, says this about EV demand, quote, "It's a challenging demand environment. We believe external factors could impact our 2025 expectations, including changes to government policies and regulations." So I really have two conclusions here. Number one is this Rivian guidance could be a big red flag for the consumer. We had Walmart earnings today. Walmart, threw out the yellow flag, if you will, for the consumer, suggesting that there is now some broader weakness. It's too early to obviously tell how extreme that is. If it's something that is a true problem, or if this is maybe just the hangover effect from the holiday shopping season. We don't know exactly, but Walmart gave us a bit of a, I'll call it yellow flag today. It's not a red flag, like, oh my gosh, this could be a real problem, but like something we want to pay very close attention to. Now, Rivian could be giving us another red flag about the consumer, because people don't just stop buying vehicles. People don't just stop spending money. Consumers always spend all of their money. It's the American way, after all. I mean, obviously not for you, because you invest in stocks and, well, you have a long-term portfolio. You're not everyone in America, okay? So generally speaking, that's kind of what happens. People spend all their money and they buy things, okay? They buy cars. They don't stop buying cars. unless they lose their jobs or they're really concerned about their economic security, things like that, or they just can't afford it. Okay, if rates are just too high. Either way, I think this is probably a bit of a red flag. Now, ultimately, I think the Fed is going to be very quick to turn dovish as you start to get more of these yellow and red flags about the consumer. Okay? They're going to be very quick, especially with Trump as president trying to, they're doing all they're doing in Washington. Yeah. They're going to be really fast to turn dovish when things start to look bad. The second thing I could logically draw or take away from this is maybe Rivian is seeing more competition from Tesla. Maybe the cheaper, lower priced Tesla is an area of concern for Rivian. That's good news for Tesla. No consumer issues there. Which, that's the problem. If the consumer is just so, not doing good that they can't buy a vehicle, that's going to be an issue for Tesla as well. And that's why kind of this Rivian guidance is kind of important for Tesla. It could be really good for Tesla or could be really bad. Again, if cheaper, lower priced Teslas, the new Model Y, the cheapest variant of the Cybertruck is the reason why Rivian's guidance is coming in low. And I know Rivian didn't say it's competition. Rivian's not going to come out and say, oh yeah, we're not expecting to sell as many vehicles because of Tesla, because of competition. They're never going to come out and say that. They're just not going to. So you kind of have to read between the lines. Why are they saying this? And it's either two reasons. Tesla is bringing some serious competition this year, in which I think that is the case anyways. But is there weakness in the consumer? Are borrowing costs so high for so many people, and couple that with a weakening consumer and people losing their jobs, that it's an issue to be able to buy a car? Is that going to be an issue for Tesla? Now, good news is ultimately, I believe that, again, when you start to get real warning signs from the consumer, inflation's not going to be an issue because you almost have never seen inflation be an issue with a weakening economy. And the Fed's going to be quick to be dovish. 10-year Treasury yields are going to plummet at the first sign of material weakness in this economy. Now, could that be negative short-term for markets? Of course. You're always going to get that growth scare when the economy starts to look rocky. You're always going to see markets go through a crash or correction during that moment. But the other side to this is if we avoid a recession, which we probably will, the U.S. economy doesn't just walk into recessions, and rates do fall, that's going to be really good for Tesla's EV demand. Now, I do expect this year is going to be a lot less about the car business side of Tesla versus Optimus and AI. I think this year's really all going to be about AI. And ultimately, I believe the car business in the second half of this year is going to kind of be seen like Apple's different businesses. Nobody gives a shit about the Mac, the watch, AirPods, iPads. None of that BS matters for Apple. Two things matter for Apple: iPhones and services. To a lesser extent, iPhones. It's really all about services for Apple. Okay, that's where the growth is. And while we're going to have growth in the car division of Tesla, the massive growth is in autonomy. It's in Optimus. And these things are close enough to really start paying attention to, if you're a Wall Street analyst anyways. Robotaxi launching in June, yeah, you better start paying attention to that. Optimus in production by the end of this year to boost margins, yeah, that's close enough. You got to start paying attention to that. Optimus to be, sold to third parties in 2026, that's close enough. You should start paying attention to that. So, let me know what you guys think down below in the comment section. Is Rivian sending a massive red flag for the consumer that we should pay attention to as investors in Tesla? Or is Rivian kind of suggesting or saying, in other words, just not the full truthful way, that Tesla is going to be such a competition burden to Rivian that they're not going to sell nearly as many vehicles as Wall Street was expecting. And that's why they lowered guidance. Let me know your thoughts on that down below in the comment section. I do think we will want to watch over the next couple of weeks and really over the next couple of months how the economy evolves from here and how the labor market evolves from here, because a lot of people right now are being fired, at least from government positions. A U.S. judge rules that Trump's administration can continue mass firings of federal workers. I mean, there's going to be more headlines like this. There's going to be more job losses in the government sector, and the government sector has been one of the largest employers of workers, jobs in the last couple of years. You could see some material weakness in the labor market from this. Now, the good news is weakness in the labor market is very disinflationary. Almost never in America's history have you had an inflation problem and a labor market problem, because demand ultimately dictates price. Okay, so if you're getting fired and you literally cannot buy a product, companies will lower prices to sell product, because what's worse than not selling product? Well, inventory. Okay, the last thing you want is to slow down your factory because you're not able to sell your product at a certain price point. What you will do is you will cut price until demand follows suit to keep your factory at mass production, because not only at a higher price point, maybe a price point that people start to revolt against, you don't sell as much, okay, but you start to get backlog and excess inventory. Maybe you have to slow down your production. Slowing down production, not utilizing that, capacity, is a problem. That is literally what destroys car companies. As an example, if you have your product at a high price point and you're not able to crank production at that facility, that's an issue. And that's really why Tesla lowered prices in the first place in 2022, because they didn't want to stop, producing as many vehicles. If they had to cut prices to sell more vehicles, that was worth it, because shutting down the factory, like reducing the output of the factory, cost a lot of money, and it really eats into margins and overall profitability. So I think this is something we really want to watch here over the next couple of weeks and months. And again, with less, waste, and with DOGE doing what DOGE is doing. At the time of recording this video, DOGE has saved American taxpayers an estimated $118 billion. This is also very disinflationary. Probably not great for the economy as well. We will have to see how things kind of balance out, where participation is at, and where overall investment spending is at, and that'll really feed into the overall economic numbers also. This is kind of anti-growth, but again, is it good growth or is it bad growth? You'd argue it's bad growth because it's just government spending and deficit spending. So net, is it bad for the economy? Well, let me know what you think down below in the comment section. Now, this will ultimately lead to rates moving lower. This will lead to treasury yields specifically moving lower. 10-year treasury yields today were down about 3.5 basis points. And I believe a lot of that had to do with Walmart's earnings. Walmart came out and essentially warned that the consumer is starting to slow down. Like, not just the lower income, but really all consumers are starting to slow down spending a bit. And Walmart essentially came out and guided lower today. I warned about this as an issue. If Walmart had negative things to say about the consumer, that was something to pay very close attention to. Now, there's a big difference between some weakening and a recession. So keep that in mind. We're not talking like red warning flags here. Economy's recessionary all of a sudden. We're talking about a consumer slowing down. And I think that's going to be very good to bring down inflation. But it is something we want to watch because it is a slippery slope. And when you do start to see weakness, and it can materially get weaker from that point. And that is why the economic data coming out tomorrow morning is going to be so important. We are going to get S&P Global Composite PMIs, manufacturing PMIs, and global services PMIs for the US. Now, composite PMIs, kind of important. That's kind of your headline number. Manufacturing PMIs really are not important at all. Manufacturing's been in a recession for years now. It's only 20% roughly of our economy. It's not the big, driver of economic activity. It's your services numbers. Now, what happened last month is you actually had services come in well below expectations. Okay. It kind of plummeted month over month. And if that happens again, that's something we will want to pay very close attention to. Because anytime you see services really start to slump, you get growth scares in markets because services is 80% of the economy. At the same time, you have the government cutting, waste and wasteful spending, which, yes, unfortunately does add to GDP. It does kind of artificially stimulate the economy. Mix the two together. If we get a bad services report tomorrow, you're going to watch 10-year treasury yields plunge. That could short-term be positive for Tesla. Medium term, again, it depends where the economy goes. If the Fed continues to kind of hawk the markets. If the Fed hawks the markets, economy slows, that's not going to be great. Okay, so I think we're heading into some very volatile markets here soon. Doesn't have to be negative. Again, as long as the economy doesn't weaken too much, as long as inflation continues to make progress and the Fed is not super hawkish, then we're all going to be good. Okay, markets are going to continue to move higher, and that's that. I think the last thing the Fed wants right now is to be wrong. Okay, I think the Fed's going to act early before being wrong. What I mean by that is the Fed was late to start raising rates. I don't think the Fed is going to be late to start cutting rates. I believe if we get one or two bad data sets that's like, whoa, okay, we have an issue here with growth, the Fed is going to almost instantly become a super dove. And that's also going to help boost up markets, gain confidence. Okay, if the Fed's dovish, normally you don't want to bet against markets. If the Fed's accommodative, I should say. And that is what we could be heading towards. And that is going to be very positive for Tesla if that happens. And honestly, that looks likely at this point. Walmart just kind of told you things are not great out there. There is weakening happening. People are pulling back. Now, tomorrow morning, we will also get the final numbers for Michigan's Consumer Sentiment Survey. Specifically, inflation expectations for the 1 year ahead period is what the markets are going to be looking for tomorrow to see if that comes down, because you jump from 3.3% to 4.3%. This was really skewed by Democratic respondents in the survey, which on average expected about 5.5% inflation. Republicans almost expect deflation, and independents expect around 3.3% inflation over the next year. So there is a huge spread here, something we have not seen probably ever, and it boosted up these numbers. So now that tariffs were not actually implemented right away, there was a delay. Could these numbers come down? Do they go up again? It's worth paying attention to, because even Fed Musolium today did reference a rise in inflation expectations. And he was talking about this inflation expectations survey. And again, that just kind of shows how out of the loop the Fed really is, because everyone knows this was skewed by politics, which is something you probably want to take with a huge grain of salt. Now, what's also very interesting about Tesla specifically is we're sitting at the lowest short interest in Tesla's history, as I've shared with you guys on this channel before. But yesterday, you had 1.5 million shares on net that were covered on. Today, you had 200,000 shares that were covered on. It seems like someone may know something out there about Tesla, maybe positioning for something that, some people are not talking about, okay? Because you're at the lowest short interest in Tesla's history. At a time in which deliveries are, quote unquote, falling 60% in Europe and 30% in China, that doesn't seem like a market environment where you would want to be less short on Tesla. Sounds like the story's falling apart for Tesla. But in fact, that's not what big money is actually positioning for. Big money is positioning for a rally in Tesla. Yesterday, you had a positive order value in the options market from big money at 85%, positioning for upside. And well, some of these trades are skewed towards big upside. I mean, some of these are like 450, 500 strikes by March, like soon, short term. Even today, you had 322 different trades totaling $1.31 billion with a positive order value of 68%. Not 90%. I mean, it's not like ultra bullish, at least today, but 68% is 18% more bullish than bearish. All pretty much twice as bullish than bearish. 2 times as many bullish options or bullish trades versus bearish trades. I mean, that's telling you something. If you want to pay attention, if you want to listen, that's up to you. But it is telling us something. It's telling us that big money is actually bullish at a time in which the stock wouldn't necessarily reflect that. And that could mean someone somewhere knows something that you do not. Because as I've said here on this channel recently, we're smarter than Wall Street. Most of you are smarter than Wall Street. You know your shit. You know Tesla more than the Wall Street guy does. But don't think for a second you have more information than they do. They know people that work at Tesla, that know the news before you do. And that's why looking at least what big money is doing can tell you a whole lot. In fact, that's why a lot of the times here on this channel, I can point out right before a big move comes for Tesla, because you can see it in the hedge fund and institutional option activity and what they're doing with their short positions. Now, am I going to come out and say we're going to rally 15% tomorrow? Or there's some crazy, big news coming? I'm not going to go out on a limb and say that necessarily. It wouldn't surprise me. It wouldn't surprise me if the quote unquote Model Q or Model 2 announcement comes out very soon. That Tesla's ahead of schedule, that they set an event for the Model 2. I would not at all be shocked by that. So just as a recap, what did we learn in this video? Well, we have some very important economic data tomorrow, and really it's important because we are starting to get some weakness out there. Walmart earnings highlighted that. The services data last month was bad. If that comes out bad again, that's going to drop 10-year treasury yields quite dramatically tomorrow, probably 10, 15 basis points or so in that range, depending on how good or bad it is. And I think the Fed's going to grow a lot more dovish quickly. That could be a positive for the auto sector. That could be a big positive for Tesla. And at this point, Tesla needs a win. We know that Rivian is facing problems. We don't know if that's because competition from Tesla or, Ford and GM to a lesser extent, or if that's really just a huge red flag for the auto sector. And really, it's a red flag on the consumer more than anything else, because people don't just all of a sudden not want to buy a car. Question is, can they afford it? Are they losing their jobs? Do they have income anymore? Like, those are the bigger questions that are kind of the red flag. We also learned here in this video that hedge funds and institutions are very bullish, more bullish than you have ever seen them before. At a time in which the narrative around Tesla, it seems super bearish, seems like everyone's bearish on Tesla. In fact, the money is not bearish on Tesla. The money is actually very bullish on Tesla, and you could be due for some good news soon. So let me know what you think about this information down below in the comment section. As I said in the last video, as far as a technical perspective, you're kind of just sideways here, really over the last week. You're either going to break lower under this 100-day moving average at $341.55, or you're going to break above 363 and close above there. You break above there, then you got a bunch of different levels. 20-day moving average here, this purple line. You have this downtrending line in which I do need to extend out, which is roughly around 380. You break above those two levels, you're going to be at $400 before you know it. You break above 400, then you're looking at a, potentially larger rally to new all-time highs. Okay, so 400 is now a critical technical level for Tesla. And, I don't know what's going to happen next. And that's why we need to pay close attention to some of the events that we have, starting with the economic data tomorrow. And again, honestly, we could get great news for Tesla at literally any moment based on what I see these short sellers doing and the option activity now for really the last couple of weeks. Gentlemen, that is going to do it for this video. Let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.